Morning, Steve Freed in Chicago with the morning grain comments. Well, it's April Fool's Day, and for those people that were long the grains going into last Thursday's USDA report, they've already had an April Fool's joke played on them. As far as after the dust settled, most of the market is still afraid of lower prices because of the USDA report. Not a lot of people in looking at the corn numbers can justify yet telling people to make new positions on the long side. Basically what the USDA said was in that quarter only 1 billion bushels of corn was fed. You still have the same animal numbers, and historically the range has been between 1.3 and 1.5 billion bushels fed. So if the USDA put out an S&D in corn today for old crop, they probably would change their carryout from around 630 up to maybe 930 or 960 million bushels, and that's a bearish number for corn at these price levels. Some people think that July corn could still drop another $1 between now and this spring, especially if the crop gets planted on time and looks good. So that was unprecedented, unexpected, and certainly negative to the marketplace. Over on the bean side, not quite as bearish, even though they did find more March 1 stocks than market had anticipated. You can kind of massage the numbers a little bit and come out with a carryout this year of 140 instead of the government's 125. So that's not the end of the world. So the key in the bean market is going to be just how much more demand is shifted here because of South American and especially Brazil logistics, and how many beans the Chinese or end users want to buy on this break. We're kind of no man's land technically. We broke below $14 in the nearby bean. Your next support's $13.50, so we'll see if we try to establish that range. For new crop, acres for beans in the United States, a little bit lower than the average trade guess, which really doesn't raise the carryout next year that much under normal conditions. So even though the USDA in February said November beans need to go down to 1050 under normal conditions, it might be a slow track down to that level. Not much in the wheat. USDA did find a few more wheat stocks, but the right amount of acres that the market had anticipated. But wheat's going to follow corn price direction on the downside. As far as weather is concerned, now that it's April, we have to start looking at the Midwest weather forecast. Right now it looks like we're going to see a little bit more milder temperatures maybe in the long range maps, but what's critical is this weekend shows rain moving across the Midwest, and if that continues, that could slow early plantings down. Today, after the close, we'll get our first crop ratings of the winter wheat crop. We expect it to be rated below average and maybe below last year. And we'll watch and see if that has any impact on prices. Grain inspections today should be on the low side, and we'll just kind of see how much more liquidation needs to occur because of the USDA stocks report. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.